All right. Good evening, everybody. First things first, really sorry about missing last week's session. I did do a live session. I don't know what I did or didn't click or didn't save or what I did wrong, but apparently it didn't keep and I didn't notice till the next day. So at that point, it was all good. So apologies for that. Hopefully you had a great week from an investment perspective. So let's jump right in. This will be a quick one. I think there's not a ton of earnings to talk about, but there's some other really great things we got to cover that are frankly super important, and I want to make sure we get out there. A couple of big things coming up this week. First and foremost is going to be we're seeing the consumer price index coming out this week, the numbers for it, as well as some retail sales information. I want to talk a little bit about married puts as well, and then also the fact that we see the federal unemployment sort of additional money ended officially. So first things first. As always, one of the big things we're watching as investors and traders and just our own personal money managers is really this focus on data in and around inflation, how consumers are spending the money, and in addition, what's going to happen. I've got a story for you in a second here, sort of around what I'm seeing from an inflation perspective as well as what I'm seeing from an unemployment perspective as well. So first things first, what we're looking for is Labor Department's August Consumer Price Index, which will be coming out on Tuesday. The general consensus is that there is an expected deceleration on a monthly and annual basis. And what this really means is, to put it into layman's terms, is that overall economists believe that the peak growth rates we're seeing in prices for consumer goods and for services as well might be done now. So this is why they constantly are talking about transitory. It's just for the time being. It's not permanent. Inflation's not going to be here forever at this level. This is a good indicator to find out what's going to happen there. And I think it's important to get our eyes on it and understand, what if they're wrong? What does this really mean? What does that look like? Is it not transitory? Is it going to take longer to start seeing that peak number? I have friends who work in real estate sales, and they're starting to see demand just slightly diminish. Not heavy, but not the 30 or 40 bids on a house, not the 200 people at every open house. So not that that's necessarily a true big indicator. I felt like it was just enough to start hearing them say, like, yep, they're starting to see those things come back. So look, the bottom line is this: we're going to find out something really important about how inflation is tracking from consumer price index perspective on Tuesday. I think it's important to break down the numbers and understand from your perspective what's goods, what's services, what's food related, what's gas, what's milk, et cetera, right? All these different things. I think it's good to break that down and understand, but just be paying attention because there can be a lot of volatility post-reporting on a lot of different types of stocks, a lot of types of index funds, ETFs, mutual funds, et cetera. So just be aware of that and know how these things can move. The other thing that I want to touch on quickly as well is on retail sales. So I had covered this a couple weeks back, and I want to cover it again here. This idea of retail sales is really to get a feel for how are people spending their money, right? I think this is a big deal because the past couple of months, what we've noticed from an economic perspective is that there's somewhat of a backing up. Now that the stimulus checks have sort of largely gone away, we know government support is starting to disappear from where it was in the beginning of the year. So we've been seeing some retail sales fall behind. Not January, of course. July, we did see a drop of about a 1.1% change, which was not great. That's not what was expected. I think that the feeling here is that between inflation and retail sales, it's, our price is still rising. Have we hit a peak? Or are they coming back down? And are people starting to spend money again? I think we're going to see this in a couple of different places, especially the used cars. Of course, retail sales in general can spread across a lot of different topics, but it's just another yet important factor to be aware of. What I wanted to point out too, that's sort of not necessarily related here, is with the jobless reports not being good recently, unemployment, additional benefits coming to an end. I went for a pretty long ride today with my wife and kids, and we were up about 2.5 hours each way. And I'll tell you what was absolutely stunning was the entire way, anytime we got off of a highway, every single business, it felt like, had a now hiring sign. I mean, like, you get off the exit and it's immediate. It's commercial businesses, retail businesses, food establishments, everything. Everywhere we went, we stopped for a coffee, and there were like 4 signs before I even made it to the front counter, now hiring. We went to a theme park, and they literally had now hiring signs everywhere, plastering the place. And I think that while a lot of people have been able to sit back a little bit and wait for the opportunities and have a strong point of negotiation in and around the jobs they're looking for and the kind of pay they want, I think with these unemployment benefits or the additional benefits coming to an end, I think what's happening is we're going to see some of these places, number one, they're offering pretty good money, actually. I can't speak for the entire country, only what I'm seeing where I am. But we're seeing coffee shops offering $15 an hour. We're seeing traditional jobs that would be in the minimum wage range, in that like teens, 14, 15, $16 an hour. There's a Dunkin' Donuts, one city over from me, that's starting at 17.50 now for entry level. Look, I'm not delusional. I understand $17.50 is not going to buy you a house and pay every single bill you have, and especially if you have a family, it's going to be very tough. But 17.50 is a lot more than these places have ever paid before. How you feel on that, as far as whether it's good or bad, or politically what you think of it, or where it falls on the spectrum of being fair or equal or livable or not livable, welcome to your opinions, however you want to take them, of course. I'll simply say, I think it was just a matter of time, right? I mean, at some point, people are not going to go back and work if they don't think it's going to be worth the while to go and work. And I think that this is the way capitalism and sort of an open system of capitalism is supposed to work. Labor at some point becomes abundant, and we see those hourly costs come down and people start to compete for work, which is why there's a minimum wage number. And then other times we see there's a glut of openings and people don't want the jobs. So inevitably they have to start raising those prices. It's a cycle. Everything in the economy is a cycle. And it's important to remember that as an investor or a trader, that it is nothing but one big cycle that includes smaller cycles that build it out, right? And I think this is a really, really key moment where we've had conversations for quite literally decades about unemployment numbers, about inflation numbers, about minimum wage, about the kinds of jobs people are getting. Take it for what it is. If entry-level jobs are starting to pay much, much more money, this is just going to put more money into the economy. Yes, I understand. Of course, you could argue that rent's going to go up and inflation's going to drive up. Well, these things are happening anyways. This is just now potentially more people with more money to spend. So I just want to call that out, that that's something I'm seeing everywhere I go, is just a preponderance of now hiring everywhere. And, frankly, for jobs that are now offering quite a bit more than they were just a few years back. So, hey, good for the people who are getting these jobs. I hope they do great things with it, and hopefully they're here investing. The other piece I want to talk on was, in fact, these benefits coming to an end. Now, of course, unemployment still exists. These are the additional benefits that sat above and beyond that, sort of to really help folks through this time. And look, I don't know what's going to happen with it. We know the rental moratorium went away. There's been a fight in court about this. Biden's administration can certainly probably come up with different ideas to try to get that back on the table. Here it is at the end of the day, right? People are going to have to go back to work, most likely, right? There's really no way around that. I think that this means that we're going to see businesses start to pound away again. And I also think we're going to see some issues on the rental side of the market. I don't think, I think oftentimes things come to an equilibrium, even though sometimes it feels like they don't, right? And the reason for this is there tends to be a lot of elasticity built into these ideas where, there's no one to take the jobs, the pay goes up and then it comes down, and it kind of does one of these things where over time that they're going to cross their paths multiple times as they try to solve for these issues. And I think you're going to see that with rental prices, home prices. I think you're going to see that with entry level pay for many jobs that are out there. And I mean, look, there's a reason why there's a minimum wage. I get it. And there's a multitude of arguments for why it is what it is. There's just as many for why it should be higher or should be totally different than what it is, or maybe it shouldn't be one at all. I think the reality is that the benefits of making sure people are in a good place, they can support themselves, not be supported by the government, which really is no such thing in the first place. It's just tax dollars of those who work. I think there's nothing wrong with paying people good money. If this is what it took to get some of these jobs into a better pay range where someone can afford to pay their bills, hey, great. It doesn't hurt us as investors and traders. This is what we want. We want more money sloshing into the economy. We want more money being spent. We want more retail sales. We want to see inflation come down, or at least if it's going to go up, we want to make sure we're seeing some sort of wage growth to follow that. So this brings me to my last point tonight. I was reading a great article the other day about married puts and the importance of plays like that during this type of an economy where it feels soft sometimes, and other times feels like it's tearing. Real quick, a married put is essentially when you buy an equity position, shares of Microsoft, say, I don't know, whatever it could be. and you buy a couple hundred shares of Microsoft and you want to hold this long term, but you're fearful that there could be potential downside in the near future, 4 weeks, 8 weeks, 12 weeks, whatever. It could be any number that you think. The idea being that like you're going to immediately cover yourself by buying puts. The theory here is if the stock goes up, all you're going to lose is the premium for that put that you bought. And if the price goes down, you're going to gain profit on that put, which will help to cover the losses of the stock position you're owning. So the beauty of a married put, in other words, is you get downside protection on a stock that you do want to own, which helps to lessen that blow until it goes back up if you believe you have a long focused view of that stock. And then, of course, the only real risk you have is if things go up, you lose some of that premium. So there's some break even to be profitable on that underlying holding. It's a strategy a lot of major investors use who are moving very large amounts of shares. This is not to be confused with things like callers, where perhaps what you're doing is you're selling a covered call above the price. You're buying a put to protect both that downside, take advantage of the upside with the premium if you think there's going to be some sort of a window of minimal price movement. So this way you're covered in the minimal price movement with a premium on the covered call. You've got the protection for the downside risk on the premium that you bought, on the put that you bought. And there's a million strategies here, but I just want to, the reason I'm bringing this up in general is I'm looking at like all these things happening, right? We've got the additional employment ending. We've got stimulus largely ending, I would say. Maybe there's some stuff here or there. We've seen the rental markets, rental moratorium, coming to an end. We're seeing prices go up to hire folks. There's just a lot of things going on. Now, combine this with CPI data that's coming out, retail sales data that's coming out, and there is potential for big moves. It could be positive. It could be negative. I just think it's important to understand that if you're in positions and you're not 100% confident near term on what is likely to happen, there are lots of great plays you can make to hedge yourself for the downside, to take advantage of of little to no movement. If you think there's huge potential to the upside, you can play areas there as well. And really, I think at the end of the day, the idea is you need to find a place where you can be active in the markets in a way that makes you sleep at night. Whether that's having to spend a little bit of premium to always ensure your downside is protected, and always never really means always, but to whatever degree you can protect yourself, or you're just looking to create a little more short-term capital off of the positions you own. I think it behooves yourself to understand what those strategies look like. Oftentimes, when I talk to folks about what they're doing or how they want to play options, it's always something like they're really confusing. I'm gonna start getting into it, but I don't know much about it. It's like, all right, you got to pump the brakes. You have to learn about these things first because there's a lot more than just buying a call or buying a put. There's so many strategies. And oftentimes the strategies are about reducing risk down to really as little as possible. And this means you got to pay a little premium. I think the best way to think about it in terms of like a married put is when you buy your home or you buy a car, you have insurance on those assets forever. Like on my house that I'm sitting here and recording this video in, from the day I bought it till the time I don't own it, I have an insurance policy, a homeowner's insurance policy. And I have to have that because if something happens, I'm protected for that risk on the downside. This is the easiest and best way to think of a married put. It's a put you're going to try to really have for perpetuity, connected to that stock. Now, granted, it doesn't mean you have to, doesn't mean you always will necessarily, but that is sort of the theory that you are marrying that put to that stock and protecting it for the long term. So something to consider. And with that, I'll leave it short tonight. Sorry again for last week. I don't know what happened with that upload and why it didn't go live and save, but we're back on the regular schedule here. I've got some more videos I'm going to be putting out during the weeks. I know I've been a little bit behind on that. Excuse me. The markets have been so crazy. It's been hard to pull away from managing multiple portfolios, frankly, and just really staying on top of the numbers and what's happening. So what I'll say is this. I practice what I preach, and I'm a big fan of hedging everything I can, looking for opportunities to take capital out whenever I can when it's additive to what my positions and portfolios look like. I get fearful when I see these stories coming out, like Robinhood being sued for oh my gosh, order flow. And then you see like Webull is launching tons of new cryptos that are available to be bought. And I'm reading the chats and the comment sections, and it's like, holy moly, I feel like we're in the 90s with message boards where people are just shilling and pumping all kinds of nonsense. Now, I understand, of course, people made a lot of money doing this, But I think at the end of the day, not a lot of people really have made money doing it or have held on to the money they made doing it. So please, 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 if you're taking huge risks, you just need to take the time to understand what is built into that risk and how you can protect yourself from it. Especially if you're purely getting to this as someone who's brand new and all you're looking to do is, I want to buy a ton of stock A because I think it's going to go through the roof. Make sure you know how stock A interacts with, you know, other things in the economy like CPI, like retail sales. If they're looking at things like unemployment, if that affects it, make sure you understand the industry and what risks there are for that as well. I know when you only have a couple $100s in an account, maybe a couple $1,000 even, it feels like what's the big deal? It's never going to grow. I'm going to take some big chances. Man, I'll tell you what, there are a lot of people who start with very little and over the course of 15, 20, 25 years have a whole lot. And don't get me wrong, I would love to see my portfolio double every 6 months. That'd be great. I would be living the dream. Maybe I was sitting on my Lambo recording this. But the reality is, building wealth in the markets is not hard. It's about time. It's about smart decision making. It's about protecting yourself where you can. And when you do that and you build a strong portfolio, there's no harm in thinking about where you have speculative capital or where you can take some of those big swings for the fences. I think that's totally reasonable. And every person has to make that decision for themselves and figure out where they're comfortable. But the reason I keep talking about these events, these economic indicators, these signals is the more and more people I talk to, the more I realize they pay no attention to earnings, to economic indicators. They don't pay attention to the movements of peer stocks. And hey, it's great, but the problem is 10 really decent moves in the right direction can be wiped out instantaneously by one bad move in the wrong direction, especially if you're on margin. So anyways, I hope you're getting something from these videos. I'd love comments if you are. I know the viewership has gone way down, so hopefully some people are still checking them out. But either way, I appreciate the time, appreciate you watching. Hope you have a great week and pay attention to CPI this week. It's going to be really important. So with that, thanks so much. And thanks for watching. We'll see you later.